Welcome back to the Deep Dive, where we tear into the source material so you don't have to spend your weekend glued to financial data feeds. Today, we are pointing the telescope straight toward the aerospace and defense sector. It's just been generating some truly explosive headlines and, well, price action.
It really has. I mean, it's more than just a hot sector. It's this high-stakes ecosystem. You've got massive government contracts, shifting geopolitical strategy, and of course, the whole commercialization of space.
And that's where we're focusing. We ran a pretty rigorous stock screener to pull 3 specific names that are showing just extraordinary technical momentum.
Yep, FJET, RKLB, and LUNR. So our mission today is to give you a clear, objective analysis of the news, the financials, and, the technical signals that are driving these moves.
We really want to break down what's happening in these charts and balance those, spectacular gains against the structural risks.
Exactly. The whole space sector has kind of caught fire, propelled by things like favorable White House policy and, that consistent market whisper that a SpaceX IPO will eventually just lift all the boats.
That's a huge catalyst just hanging out there.
It is. Now, before we unpack the specifics, just a crucial reminder, everything we discuss is based purely on publicly available data. It's for educational and illustrative purposes only.
And it does not and cannot constitute investment advice.
Right.
Okay, let's start with the name that has just been the most dramatic on the screen. This thing is pure, unadulterated, speculative frenzy.
You're talking about Starfighters Space Inc., ticker FJET.
That's the one. This company is essentially brand new to the public market.
That's an understatement. FJET only debuted via IPO on December 18th, 2025. It is the definition of a high volatility, low information play.
And the market reacted, violently. In just one day, FJET went absolutely vertical. It closed at $31.50.
Which was an astronomical gain of 370.85% from its previous close of just $6.69.
And the catalyst. What was the specific trigger?
It was an article, just one article that successfully framed Starfighter Space as a potential SpaceX IPO alternative.
That's it?
That's it. And what's so fascinating here is that the entire price move is driven by market psychology. It's that fear of missing out, FOMO. Because fundamentally, we have nothing.
Nothing to analyze.
Exactly. Our data feeds list market cap, PE, EPS, every single fundamental metric as just a dash. They simply don't have established financials yet.
So for anyone learning, this is a clear lesson. When the fundamentals are absent, price is completely dependent on momentum and narrative.
100%. Which means if the balance sheet gives us no clues, we have to rely entirely on the technicals to gauge the risk and the intensity.
So what does the price action tell us about this frenzy?
It tells us the price swings are terrifying. The average true range, or ATR, which measures the typical size of daily price movement, hit $13.49.
Wow.
That level of ATR means the intraday swings are just enormous. The stock is already far above its 52-week high and over 425% above its low.
That volatility is staggering. But the technicals do suggest some real conviction here, don't they? That relative volume is 9.38.
Yeah, and that's the key. That means trading activity was more than 9 times the daily average. That volume is what provides the conviction. And the day closed with a Marubozu White candlestick pattern.
Okay, break that down for us. What does that signify?
A Marubozu White is one of the strongest bullish signals you can get. It basically means the stock opened near its absolute low for the day and closed near its absolute high.
So just relentless buying.
Relentless, overwhelming, sustained buying pressure from the opening bell to the close. Sellers just couldn't push the price down at all.
All right, let's run a quick paper money simulation just for illustration to put this into concrete terms. Say you put $5,000 in at the previous close of $6.69 right before that surge on the morning of December 22nd.
Okay, so that $5,000 would have secured you approximately 747 shares by the closing bell at $31.50.
The theoretical value of that position would have ballooned
to $23,530.50.
That's a paper profit of over $18,500 in one day. It's a perfect example of that exponential potential when an IPO narrative catches fire.
But you have to remember, high rewards are always counterbalanced by commensurate risk. The downside potential can be just as sharp.
Absolutely. Okay, moving on from pure IPO speculation, let's look at a much more established player that just announced a gigantic contract win. Rocket Lab Corp, RKLB.
Yeah, RKLB. This is a mid-cap launch powerhouse with a market cap over $41 billion. It's the perfect case study of future defense spending driving valuation today.
They operate in two segments, right? Launch services and space systems.
Correct. And while their 21st successful Electron rocket launch was good news, the major catalyst came on December 20th.
The big one, the announcement of that massive $816 million prime contract from the U.S. Space Force.
To build a missile defense satellite constellation, a contract like that validates the company's entire long-term strategy.
And it sent the stock flying, gaining nearly 10% on the day.
Right. But when we look at the fundamentals, we see that classic growth investment paradigm in action. Despite the amazing news, the company is fundamentally unprofitable today.
The trailing 12-month EPS is negative 39 cents, with an income loss of almost $200 million.
And yet the market is pricing RKLB for massive future success. Their sales growth is stellar, over 91% for the past 3 years, but the valuation metrics,
Just staggering.
they really are. The price-to-sales ratio, or PS, is 74.7.
Just to put that in perspective for you, that means the market expects today's sales to multiply nearly 75 times over to justify this valuation. It's priced like a software company.
Not like a manufacturing and launch provider, no. This is the price of admission for exposure to future military space contracts.
But there's a positive here. The gross margin is 28.93%. It's positive.
And that's a key piece of good news. It suggests the core operation building and launching rockets is profitable. It's the corporate overhead, R&D, the expansion costs that are driving the net loss right now.
So they're just aggressively investing and scaling up.
That's the story.
Okay, let's pivot to the technical signals. The momentum is obviously exceptional, up over 96% in the last month alone. But I'm seeing conflicting signals. The beta is high, 2.15.
Which just confirms the high volatility.
Yeah,
You're probably looking at the RSI, the Relative Strength Index.
Exactly. What about that?
It's sitting at 74.65. For traders, anything near 75 signals the stock is firmly in overbought territory.
So after a run like this, the technical pressure is building for a pause, maybe a cooling off period.
It suggests that yes. And there's another disconnect with the analysts. The consensus target price is $66.23.
Which is, wait, that's actually below the current closing price of $77.55.
It is. So why haven't the analysts updated their targets yet, even after an $800 million contract win? It's an important question.
It suggests the market enthusiasm is way ahead of the institutional models.
It's a technical caution flag. Either the analysts are behind the curve, or the stock has overshot its long-term value.
And we also have to note the substantial insider sales. The CEO, Peter Beck, and other directors sold shares in the last month, even during this surge.
Absolutely. Insiders taking profits during a huge run-up is a critical piece of information.
Okay, let's do our illustration. Assume you put $5,000 into RKLB 1 month ago, before this nearly 100% monthly surge.
With a 96.43% monthly increase, your estimated start price would have been around $39.48 a share.
So $5,000 would have bought you approximately 126 shares.
And at today's close of $77.55, those 126 shares would be valued at $9,771.30.
A paper gain of over $4,700 in 30 days. That is a powerful reaction.
It's what happens when genuine defense contracts meet a high-growth sector.
All right, finally, let's travel closer to the moon with Intuitive Machines, Inc., ticker LUNR. This is a cislunar infrastructure play, about a $3 billion market cap, and it seems to be defined by structural volatility.
LUNR is a masterclass in momentum. Its monthly performance is up over 107%. Weekly is up 50%.
And the news flow here?
It includes a bullish analyst initiation from KeyBanc with a $20 target, and it's also just benefiting from that general sector optimism around White House space policy.
But like RKLB, the financials tell a stark tale of a company investing heavily without a current payoff. Income loss is high, over $193 million.
Yes, but what's particularly concerning here for me is the gross margin. It's negative 0.7%.
Okay, that's the major yellow flag. That implies that the direct cost of delivering their services actually exceeds the revenue they're bringing in.
They are losing money on their core business activities. It suggests a deeply subsidized or extremely high-cost operating environment right now.
However, they do have robust short-term stability. The current ratio and quick ratio are both strong at 6.25.
And that strong liquidity is essential. It signals they have the short-term assets to fund those operations while they wait for contracts to mature. But if we turn to the technicals, this stock is just structurally set up for wild swings.
Let's pause on that 23.81% short float. For the listener, this means almost a quarter of the tradable shares are actively being bet against by short sellers.
And that guarantees greater volatility. When nearly 24% of the shares are sold short, any major positive catalyst can trigger a massive, violent short squeeze.
Right. Short sellers scramble to buy shares to cover their losing positions, which just drives the price up exponentially.
And the short ratio of 3.27 indicates it would take more than 3 days for all of them to cover, which just adds fuel to any rally.
It's pure structural pressure.
Right.
And just like RKLB, the RSI is at 74.97. So again, firmly in that overbought category.
It is, and we see that same theme of proposed insider sales from the CEO, Stephen Altemus, and other officers scheduled for December.
Another indicator that executives are planning to monetize this run-up.
That recurring theme of insider profit-taking during peak momentum is a key observation here.
So let's finish our paper math. Let's use LUNR's recent 50.09% weekly performance. $5,000 just 1 week ago.
Okay, based on that weekly increase, the estimated start price was around $11.12 a share. So that would get you approximately 450 shares.
And at today's close of $16.69.
Those 450 shares would be worth $7,510.50. A quick paper gain of over $2,500 in 7 days.
It really demonstrates the extreme upside of these short squeeze scenarios. So when we put FJET, RKLB, and LUNR side by side, what key patterns emerge for someone trying to understand this sector?
Well, we see that the extreme growth potential, RKLB is up over 200% year to date. FJET over 270 is almost entirely fueled by anticipated future execution. All three companies report negative EPS.
They're all fundamentally unprofitable. The market is paying a huge premium for growth that hasn't materialized yet.
That's the bottom line.
So I think our 3 core takeaways for understanding this environment are pretty clear. Number 1, the space sector is overwhelmingly driven by high momentum news. IPO narratives, analyst targets, government awards, they completely overpower traditional valuation in the short term.
Number 2, technical analysis tools are essential when the fundamentals are weak or absent. The high RSI scores for both RKLB and LUNR are critical short-term warnings. And that high short float in LUNR is a definitive signal that structural volatility is just baked into the stock.
And finally, number 3, that extreme valuation relies entirely on the successful execution of future contracts. You aren't buying current profit, you are buying future potential and paying a huge premium for it.
We've covered the whole spectrum today, from, the pure speculative momentum of a brand new IPO to a defense contractor getting validating government deals and a lunar play set up for a squeeze.
Which brings us back to that recurring data point in both RKLB and LUNR, the insider selling. Given the high level of executives taking profits, even amid these massive stock surges, how should a curious investor weigh insider confidence against soaring market sentiment?
Is the CEO selling a few shares just prudent risk management, or is it a quiet signal that the valuation has temporarily, detached from reality? Something to ponder as you track the next rocket launch. Thanks for diving deep with us.
We'll see you next time.